Hey, how's it going, guys? Welcome back to the MentorFX private mentorship. This is webinar 131. It's amazing to have everybody on here today, right now. I do have to disable notifications, annotations, there we go. And yeah, I think we're looking good. I have the chat open right here. So it's been definitely, for me at least, a much slower week. I discussed this a little bit with the team in the MentorFX trade ideas and whatnot. You can take a look at some of my watch list here. Like, it's basically been touching nothing. Like, as I kind of go through this, I'll walk you through a little bit about what was going on in my head and what I was looking for on the charts and then what actually ended up playing out. So as you guys know, at the moment, I actually trade the 15-minute personally as the entry time frame, whatever you want to call it. For stocks, I'm actually using a 1 hour now. I've been experimenting with the daily and an hourly just to see what works better for me. And seems like the hourly just makes more sense because the daily is just too much time waiting, too much money locked up. For instance, I'm going to show you an example of that right here. So this is like Dash. This is DoorDash. I took an entry on this a few days ago. Let me find it for you guys. So I took this entry on DoorDash a few days ago where I stopped this high right here, just take it long. And again, so to take positions from a stock perspective, so before we talk about normal assets or any assets, honestly, right? Because all of you should be aware that what you're learning here is going to be transferable across any time frame and any asset, which is a very powerful thing, because that means when the next AI coin comes and the next Jeff Bezos, in the form of his AI entity, starts a new company that swallows every other company or whatever it might be, and there's a newly traded exchange with the new world currency or whoever does whatever, you're going to be able to trade that thing as long as there's some kind of place where you can basically trade hands, right? Where there's some kind of brokerage, so there's some kind of area where you can buy with the outlook of selling later or sell with the outlook of buying later. The reality of trading, or what you're learning here as a skill set, and by the way, everyone that's new, we just kind of jump into it and then we work ourselves backwards, especially if there's questions or whatnot. But what I want to give you is something that is a skill set, something that you can use no matter what, wherever, right? That means you can use it on a stock, you can use it on a crypto. I saw a lot of people this week alone, and actually feel free to post your charts right now, right here, on the crypto side, catching beautiful trades to the top side, because right now a lot of money is flowing into cryptos, and the reality is they're a market like any other. The context is good, the market is moving, so you can look to get involved. And many cryptos at the moment are doing what? Well, they're undergone their stage one, and they're currently in this moment right here where they're in that stage two. And most opportunities this week alone, if you were taking stuff, were right here on the crypto side, where basically you had markets that on every time frame that any of you might be trading, 15-minute, 5-minute, 1-minute, 30-second, were basically doing this along some sense, right? Like basically this. And you had opportunities to get involved in here and here and here and here, et cetera, et cetera, et cetera, right? So what you're learning, just so you understand, is transferable and usable across every single asset class, no matter what. However, based on the asset class you're trading and the brokerage you might be trading with, as you all are aware, based on where you are in the world, the countries that you're using, the regulations, there are leverages associated with the things that you trade. So for instance, when I'm showing you this right here, like Dash, this is a stock. Stocks in the US are regulated with regulated brokers to be, I think the max leverage you can have is 1 to 4. If I'm wrong, I'm sorry, but it's like 1 to 2 to 1 to 4. So the reality is entering a trade like this, where in some cases, if you want to risk X amount of capital, you might have to have, let's say, 10 up to 50% of your account size, right, locked up. Which means that if you're on a daily, what does that also mean about the trade? So those of you guys that have seen the most recent videos in the ICI Extra section of the mentorship, or even if you're like brand new, I'm sure you can answer this. What does it mean inherently that will result if you're entering a chart, if you're entering a trade on a daily chart, right? And let's say normally, let me just make it even simpler. When you enter, you notice that it can take anywhere from 10 to 200 candles, okay, for the trade to play out. What does it mean what does that mean when you're entering on a daily chart? Yep, so very simply, when you're entering on a daily chart, that means your money, right, can simply be locked up from anywhere from 1 day, in the case that it maybe breaks even instantly or loses, right, you take a loss, or it can be locked up on average anywhere from a week up to a few months. Usually that's what I've seen. I've never seen a daily chart get locked up for longer than that. But the reality is that's the case. So in the scenario that you're leveraged at a certain amount and you're not on margin, or let's say you're not even on margin at all, once you're in that trade, is it easy to enter another trade with the same potential risk of like 1%, 2%, whatever it might be? No, it's very hard. You actually can't do it, right? So this is what happens when you're trading something like a daily. And these are the problems that hopefully a lot of you that are new right now are going to have. I hope one day one of your problems is, holy shit, like my money's just locked up and there's more opportunities that I can still invest in. So I don't need to be on, let's say, this time frame. So personally right now, I'm more on the hourly for stocks, because that means that my trade might be locked up anywhere from, let's say, a few hours up to a week, right? Or 2 weeks, which I'm much more happy with. So what I did for Dash, which is this right here. So the trade originally that I took was through this high right here. That's where the buy was. That's this purchase right here. What I actually did is the next few days, I closed this trade at the buy stop of this one. So I actually closed this one at a small profit. It's, I don't really judge this as me making money because I don't like to think about it that way, since the rules for the actual trade aren't technically followed. But this is the trade that, now meets rules for the ICI that I'm looking to take long and taking long, right? But now it's been scrunched into an hourly based time frame. So now I know that over this next week, I'm going to know very quickly, probably by Monday or Tuesday, if I'm out of this, or if it's going to be a move that I can move to break even and start partialing, right? For me, that just makes a lot more sense in regards to having no money locked up, but it's also a beautiful demonstration of the fact that what you're learning here is once again transferable across all assets and all time frames. So you're never going to have this feeling where you don't know how to work your way up time frames, or you don't know how to work yourself up to other assets, because the reality is every asset is doing the exact same thing and is acting as the same thing. It's just that it's doing it at different times. And you're going to, of course, learn a shit ton about that as you continue with the course. But as I work through what went down this week, I'll kind of walk you through my watch list and just show you that it's just been a super stale and kind of boring week for myself, right? So I wanted to follow longs on gold. This thing came down, right? Entered the redistribution, now is falling down even further. So for me, it's just like distribution. And if I'm entering on a 15-minute, this is the 15-minute chart that we dealt with this week, right? As price began to do this, I told you guys that I'd wait for a break here, and then if it broke this, I'd start following it long. It broke, and then the second it broke, it re-broke down and started entering this choppy back and forth environment. And at that point, I instantly walked away from this chart. So I spent the beginning doing nothing and the end of the week doing nothing on this, right? The thing that I'm doing is I'm showing up to watch the chart, of course, no shit. But the reality is there's nothing to do here whatsoever, right? Then GU, I mean, like you guys know, like I haven't been able to touch a single thing on anything. Silver, same as gold. I wanted to see longs, didn't do anything like that, so nothing there. UCHF, I wanted to see shorts, invalidated, and then started chopping backwards and just started moving long. CJ wanted to see longs coming down. GJ wanted to see longs, it's still coming down, right? UJ wanted to see longs, still coming down. So I hope as I'm kind of going through this that you guys are seeing that my analysis, my beautiful bias, is not just sitting there constantly correct. But despite being completely wrong about every single one of these trades, or of these markets, what is happening in regards to the trades? There's not been a single one taken. Because the reality is, if I'm watching for a longing market or a shorting market, there are a few things that need to occur for me to actually trade it, right? When I'm looking to, let's say, tell you guys that I'm long on gold, and it looks long to me, and the fact that we're breaking down here, so let me go like this. Let me replay mode this over to here just to show you guys. So at this point, this is when I sent out that I will be watching for gold longs. I mean, this is beautiful. This is a market that's moving in clear bullishness and clear reaccumulation and has recently broken long. This is validating reaccumulation. I want to see this reach up and keep on taking out highs, right? This is beautiful market condition for me. And then I'll step down to my time frame of entry because the hourly looks good. And this is what I sent out. You have a market that was going back and forth and recently went into multiple bearish breaks down until one break up. Well, even the indicator itself tells you this is a redistribution and it's acting as a redistribution. So when I sent this out right here to the team, Yeah, so I even said gold is entering a redistribution here. If I can start seeing it go back and forth and then enter accumulation, I'll be 100% following it. So what does it mean for this thing to enter accumulation? Well, it means that it would have to either break down, then re-break back up over a new high, because now it'd be at least going through a back and forth environment, that being a stage 1, as I teach, right? So stage 1, stage 2, that's really the only stages markets move in, and this would be akin to a stage 1, so I could watch for the stage 2. So, you know, if it did something like this, then yeah, I can start following it. Or if it maybe breaks up and then starts breaking up again and then maybe breaks down, I could consider following this thing. And then look what happens, right? This is the entire week on gold. So I wait, I wait, I wait, I wait, I wait. I wait, I keep waiting. Price breaks that high. Okay, so it's only made 2 breaks up, which still puts the overall 15-minute, the actual context of the 15-minute, in a redistribution, right? So there's only a few things that can happen right now. Price breaks down and then back up, thereby making it a cleaner accumulation, or keeps breaking up, so then I can follow it. So the only ways that I can follow gold here is if it does this, and then I get a trade, let's say, here. So this is, let's say, example 1 of a trade that I might be able to get in. Another way is it breaks down, maybe breaks back up over a high, and then maybe gives you a setup here that you might consider taking, or keeps going and then makes this same setup right here, right? So take a look at this. As you're looking in front of you, I had an entire, basically, week, an entire perspective, whatever you want to call it, planned on gold here, right? Now, did that occur in any way whatsoever? So it actually started accumulating here, and the reality is right now, okay, so right here, you could argue this is accumulation. Now, I don't like the way it's moving personally, but I would wait for another big move up, and then hopefully a setup here. But, so I'd just be waiting right now, so we'll see if we get that actually. Okay, so it breaks down again, and it falls off the face of the earth. And very simply, despite not being correct whatsoever about the direction, about what money's doing, about the accumulation, about the potential distribution, whatever it might have been, there's not a single loss, not a single break even, and not even a trade, right, taken on this market whatsoever, despite all the quote-unquote work that I've done. Now, what's really, really complicated for people that are completely, let's say, new or beginners or actually intermediate even, is that when you guys watch me do analysis, oftentimes on any market, how long does my analysis of that market actually take? Like, if I didn't do the explaining, if I didn't walk you through my thought process, if I just threw on, let's say, a live trading video and started doing back testing, how long would any one market at any given moment take me to do the true analysis on it? For my system, not for multiple time frames, not like, hey, let's see what people would have been doing if they're on a 1 minute. Let's see what people would have been doing if they're on a 15-minute. I'm talking about my system where I have very simply, usually a daily context, an hourly validation, a 15-minute entry. It would take me probably about 30 seconds, right? 20, 30 seconds. So when the analysis doesn't play out, do I feel like I've lost time, I've lost money, I've not been rewarded for all the work I've been doing, or do I feel like I've done exactly what I need to do and I can simply just keep going? Right? Yeah, I can just keep going to the next market. But the problem is, a lot of us that are, let's say, in the beginner or intermediate stage, and I've been here, guys. I've been here with support resistance, okay? I've been here with the super simple concepts too. A lot of you may take anywhere from, let's say, I don't know, 5, 15, 30 minutes to analyze one market, and even then might still be confused about your own analysis and doubt your analysis, which is fine. This is super normal. But what's going to happen when you've put in that type of analysis right there, right? And now the market is doing something like this, where let's say you've done all the analysis. You've drawn out, it took you 5 minutes to draw out, okay, I can see it come, reaccumulation, right? And then maybe I can get an entry here off of this, or maybe off of the fractalized MBs here, or the ICI there. So some of you may draw this out, but it might take you 5 minutes to reach at least even this. And then you might say, okay, but if it breaks down, then maybe I can look for, something like this. That might take you another 5 minutes. Okay, that's 10 minutes now. Some of you might draw that, show up to the market this day that we just replayed it and say, oh my God, wait, it's breaking bullish. Should I get bullish here? For me, you guys saw it instantly. I said, I don't like the way it's moving here. I'm out. This is not clear. But some of you might go, shit, should I be entering here? Should I consider an entry if it sets up like this? Do I wait for it to do this? So again, this might take you another 5 to 10 minutes. So now you've spent potentially 20 to 30 minutes total, right, on this market, which means that when the conditions enter anything like this or even this, what do you think most of us that are new to intermediate without the experience under our belt, how do you think most of us are going to feel? Whether we're on a live account, a demo account, a simulated account, a funded account, how do you think most of us at a beginner or intermediate stage, and even if you're here, answer it, how are you going to feel about your system? You're going to feel like you're doing tons of things wrong, like your edge is no longer working, like there's things you need to change, like there's ways you need to predict price, like there's other time frames that might be available there that you didn't think of, like there's new setups that you need to focus on. But the reality is, the move wasn't there. The thing you're looking for isn't there. And it's a very hard thing to do because, so I'm not going to even bullshit you guys, it's a very hard thing to do because when you're new, you don't really have anyone, except your boy right here and everyone else in the community, to tell you that what you're doing is correct, right? For you to draw this and this and this, and for none of them to do anything, to not have then someone tell you that what you did was perfectly fine and correct is very hard. And for you to attribute that your analysis or what you've done was right, despite what has happened, it's a very hard thing for you to do, right? And it was for me, and it will be for a lot of other people. And this is why even when you're a beginner, and I hope we've all been here, a lot of us probably have, even when you're a beginner and you start any market, one of the worst things you can do, as I say it all the time, is if you're on live price and you're then trying to predict this, like, okay, so it started moving down, so it's in distribution, so I can expect it to hopefully come up, maybe do this, come down for a distribution and keep following down, right? The problem is now you don't have to wait 20 to 30 minutes of just analysis. You now are going to have to wait, let's say, anywhere from a day or more to actually see this analysis play out. And during the play out of the analysis, does anyone know what else we're doing? As traders that don't know how to analyze quickly, let's say, at the moment, what do you think is happening every other passing candle or minute that happens here? We are reanalyzing at such a deep effect that this gets magnified over and over and over again. And now what has happened is you've spent, let's say, maybe 1 to 4 hours of your actual time analyzing this chart. But the reality is, have you learned anything, okay, during those, let's say, 4 hours of time you put in? The reality is no, right? And the person that just sat there and looked right here and said, what opportunity was given to me here? Was this an opportunity? Maybe. Do I like the way it looks? Maybe not. They've already learned more about the context and about markets they can trade than you did in your, let's say, 4 hours of hard work, of waiting for the price to play out, of whatever the fuck it is, which is why I've never been a proponent of get on those live charts and let them tell you the truth. Because when you're on the live charts, no one is there to tell you that the mistakes you're making are okay. Sorry, not the mistakes. That the mistakes you're making are mistakes you're making. No one's there to tell you that the things that should be happening are actually okay, where let's say you want to see it long, but it doesn't do it. Or you want to see it go short now, but it doesn't do it, right? No one's there to tell you that, yeah, these are both fine. Both can happen. Both do not mean you're going to be profitable or not profitable or not get trades or get trades. So those are things you need to disconnect from. But as you're live, all these things are going to be hitting you, okay? And no one is there to save you, to show you the saving grace, to signal provide for you, or anything along those lines. So, of course, you're going to get super, super stumped, especially if the context of that market is not clear, right? If the market context, like the one here on gold, is dog shit, oh my God, take this issue right here and exacerbate it by 5 million times, right? So if you're brand new today to this mentorship, first of all, welcome. You're in a really good spot. You're going to learn a fuck ton over your time here, and hopefully you end up staying on here for the long term to where it becomes kind of a joke for you to stay on because the money becomes outweighed by what you're actually able to get from a value perspective and make. But if you're new, one of the first things that you should have going on in your head is, okay, what is it that everybody around me is doing and failing at doing? Right? And what can I do right now to make to basically set myself apart even in the very, very beginning. And for some of you, that answer is as simple as hit the hashtag welcome, watch the video, read the handbook, and then get on with the course. For some of you, the answer is as simple as that. Okay? It's lagging too much. I'm sorry if it's lagging. That sucks. But it seems like it's just you. So it does seem like it's just you. Okay. So now I'm going to go through it a little bit quicker. But gold, I wanted longs. It didn't do it, right? We went through this. GU, I think I wanted longs. It didn't do it. Silver, I wanted longs. Didn't do it. UCHF, wanted shorts. Didn't do it. CAD JPY, wanted longs. Oh, it's actually setting up now. So this actually might have trades later this week. We'll see. GJ, wanted longs. It's starting to set up stage 1, but nothing. 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 And then a trade, right? Point being, I was wrong about everything. All my biases invalidated, but I did not take endless losses. Instead, you guys want to see what my actual curve looks like? Right? I took one loss. Or not even one loss. I took one potential loss. So you guys know that I treat current trades as potential losses. So as I go here, I'm in one trade right now for at least the non-stock side. And that's the NAS one, right? US 100. That's it. And you can see I have it in yellow because I watch for the potential loss. This is the trade right here. So again, like I don't know what it's going to do yet, but every trade that I take, I instantly record it as a loss, right? Because then, well, this is my curve no matter what happens now, right? That's the way I want to think about it is, yep, I'm good, right? The loss is already taken. So whether the market opens and does this, comes down and does this, right? Or does this, is it going to change, let's say, what's happening here? It's not. I already know the outcome, the likely outcome, and I've already assumed the likely outcome because I'm okay with it since I'm aware of how trading works. But in the scenario that it doesn't want to do that and it wants to do something more fun, great. This number and the curve as a result only stands to grow. So if it goes to 1.2, all of a sudden, hey, great. If it wants to go 5RR and go insane, well, even better. But guess what? The trade is assumed loss. Any trade that I take, I assume the loss instantly. Why? Because I'm a trader. I take risk. That's all I do. I take risk for the potential reward. The risk is taken. That's it. I've lost it. I've invested it. It's gone. It can do whatever it needs to now. But I'm perfectly happy with where I am right now. Right? There's nothing wrong with this. This is perfection. I'm going to go up here and have a read through what we got going on. 131, my goodness, I've been in the metric for 10 weeks. Hey. Finished my Starbucks before the webinar even started. Let's go, Dan. How you doing, Dan? Good to see you, man. Good to see all of you guys. Sarath, what's up? Melina, Aid. Did you miss the peace pod? I always miss the peace pod, bro. What's up, boss? You excited for the Christmas? Of course. We got crazy Christmas plans. We're going to go hit some like little Christmas village today, a little bit after the webinar. Nice haircut, thank you. Yeah, so it's been a very boring week. I hope you all are aware of that, at least from my end, right? It doesn't mean that a lot of you had boring weeks as well, but it does mean that there are going to be times like these, and you need to be very, very used to them because the second you start doing stupid shit is the second you lose everything, or stand the chance to lose everything. A mistake here and there is okay. You should grow the beard to the floor. Yeah, nah. It's too much to deal with. Hi, everyone. Unfortunately, I can't attend today's webinar, but I wanted to drop a question. How do you decide on which pair do you put your risk on? Personally, I choose the one with the clear story, but maybe there are some things I'm missing. Yeah. I mean, Dan said it himself. You answered your own question right there, right? You choose the pair either based on the one that's clearest, right? Or you don't trade it at all, because if a bunch of shit is unclear or a bunch of stuff is moving poorly and then you choose to trade one just because it looks a little bit better, that's a bad choice, right? I have an outline in my head for what does a good trade look like, right? And I only want to take a trade that meets those criteria. And now if there are 10 trades that look good, then I could pick the one with the best context, the one that's the most strong, the one that has the best multi-time frame confluence, the one with the best, the one that hasn't moved the furthest away from price, where it has a chance to move, but it's still the most relatively strong, right? There are factors there, but yeah, I mean, that's, you answered your own question there. Constant reaccumulations on cryptos and accumulations. Yeah, I mean, the crypto space has been insane, right? Like, there have been such beautiful moves, not specifically on Bitcoin. Bitcoin was fine. I mean, it made the move, made some more moves here, but shit. Yeah, these were great. Someone mentioned crypto to me last week around here at this price action right there or so. And I said, you know, it started to make its move and now it needs to set up again. So if it can make an ICI now on the, like, around here, then it'll be a good trade. And then it did exactly that. Right? It made one here and then another one right here. And if you really wanted to, it made a really late one here. I probably would ignore this one entirely. But this is just perfection. I saw some of you actually trade this. This is just exactly what you're looking for. And then you manage with the MBs, I probably get stopped out here. But this is just perfection. And then you actually had another beautiful entry. So I'm actually going to go over this with you guys really quick here on the 15-minute. So you get this run up. Everything is in super, super bullish, right? I jumped to the hourly, check to make sure everything's still good for the supply zones. You have this up candle that became a type 4 supply zone here. And then you have this one that became another type 4 here. So I would call this a double supply rule right here, right? So I'd be waiting for a demand to form. And right now it hasn't, so I'd wait. Okay, and then here, yeah, you get a type 4 demand zone that forms. So again, where is that coming from? You have a down candle. This is from the remastered course, by the way, guys, of course. Down candle, update the high. So you get this type 4 demand zone form, and it looks like it's in a good area on a very bullish market. That's very clear. And then daily, if you really want for the rule of 30, very, very bullish, very clear. So you jump to your time frame of entry. At that point, there you are. And now, again, you just go through the actual... you look at it and you decide if it's in a good context one, which it is, right? Clear accumulation, reaccumulation, moving long. So... the question is, what would you be willing to take an entry on? Personally, I'd like to see it probably come down. Whoops. Just looking at it right now, like, this entry is okay. I don't like it where it is necessarily. So I'd probably look for it to come down a little bit and then buy stop this. Or come down, make a move, and then buy stop here. Right, that's exactly what I would look for. So I know what I'm looking for. Now, again, if the market comes and fails, well, it doesn't matter. The analysis is wrong, but the trade isn't lost. Money is not lost or made. So yeah, it starts coming down. I don't really see anything yet. So here you have an ICI through this high, but if you did buy stop it, the question is there a way to clearly protect risk? 157. Yeah, you could maybe throw it like under this candle low here. Sometimes I'll just look at some intermediate candle lows. This looks okay. So this is a trade that I'd be okay with taking. Then it comes down, so I'd cancel this. All right, so now again, I'm just looking at what I'm used to seeing. So now I'd want to see it come up, make a high, and then hopefully buy stop here, maybe somewhere around here. I don't know if that can happen, but we'll see. See if we miss a trade or not. So it goes, and this is the first time it starts making its sideways move, but I don't see a buy here. Okay, so it starts coming down, nothing to really do. So now, again, it's in perfect accumulation, coming down. Again, if it can do something like this, I'd be happy to take a long here, right? Because this is moving beautifully. So let's see if that can happen. So it falls down, but now enters reaccumulation, exactly what you want to see, usually, when you're looking for buys. Hitting that demand zone of the higher time frame, which is great. So again, like, I'm kind of looking for it to come up, maybe come down a little bit, and then make a setup around here or here. Right? Both of those would be good opportunities. So I don't see anything right now. This is choppy for me, so I would just ignore it. And you can do this on a 1 minute too. There's going to be 1 minute trades. So on a 1 minute, what you would do is you'd wait for probably this to break. Or the 15-minute just validated demand. So you could now jump to a 1 minute and trade inside of there. There's going to be a trade right there right now on like a 1 minute. But that's not my system, so I'll wait. So enters distribution. But again, you have to be able to think through context and where stuff is happening. So, right. So this is where I see like this SSC delivering, just because of the reaccumulation model of this specific lens right here, within the context of where we are. But right now I don't see an entry. So I'd need to see it probably break long, come down, maybe make a setup around here. Right, so this is what I'd just be doing, and I'd show up every day, and I'd look at whether or not it's setting up in the way I want to see it set up, and then I'd ask myself if it's worthy of a trade. So here you have the first time 50s sloping sideways, 20 sloping upwards. First time this is going sideways. What is this low? 106. I don't see a way to protect this, really, so I would not take this yet. I would wait. Okay, take a look if something is takeable here. 2.6. I don't like it, so we'll wait. Yeah, so we missed that. Starts going sideways again. So again, 50 just started scrolling upwards. 20 just went upwards. So again, now it has one of two options. It can either go now, or it can probably come down and then make another setup around here. I'd probably be okay with the risk here since no trades have yet been taken through the high. 132. Let's see if we can protect this low. We can. Looks good. So this is a trade I'd be happy to take. Okay, so it does tap in, and then I just start managing the way I normally manage. So again, 1 to 3 for break even, or a beautiful like build up. Okay, so you get the break even here, and now you just simply manage the rest of the trade as you normally would. So this is heading straight up, this heading straight up. I probably manage 50% here or here. Do the math on that, 4.46, so 3 RR gain versus a 2.15 RR gain. I think this is fine at this low, so we wait. Okay, same thing. Start managing to the lows of the candles. Okay, so you get stopped out at 6.3. Right, I'm just showing you guys firsthand. Like, this is exactly how I trade on any asset every single day. This is what I'm looking for. And then the rest I can manage with either MBs or some kind of clean momentum loss. Right, and then I'd look at the trade-off. So if I exited here, that would be a gain of 1.5. Which I think is worth. So I'm going to put another stop there. Okay, so I get another 1.5 there. And then the rest I just trail with the... And the rest I would just trail with the MBs. And that's it. Right, so now I'll just wait until there's a MB low. And I'll move to the one prior to it. So at the moment there's nothing to do because the prior one's down here. So now I just let my rules do the whatever the fuck they want to do. Right, so I just get to wait. Unless price starts going like insanely bullish, then I can do more. But now I just get to have my money locked up and wait while it decides how it wants to play this out, right? Draw this out so it's easier to move. Okay, we're just gonna skip it ahead because I don't feel like waiting. So now you would be moving your stop to, on this low, you'd move it to here. On this one, you'd move it to here. And now this would be my entire position, and that's it. The rest of the position would be here. So again, you've like, if we get stopped out here now, we'll make about 1.5 as well. So again, now just for that work that you've done, you've just made, what is that? 3, 6, like 6 RR. Right, you made 6 RR for one trade, and now the question becomes: are you going to be okay with that if you have a 50% or under win rate, or even less? And the answer just becomes, it becomes as clear as day, right? And all we did is we followed the exact same formula for models, for context on this right here, and then we traded it. And like Alex says right here, yeah, there's been constant setups like these across most cryptos. And then you can go even deeper if you really want. Like I said back here. You could have started watching for your 1-minute trades, of course, because it's all the same thing. It's just a question of how much capital do you have, what kind of time do you want to be spending on the markets, how do you want to actually do it, and then once you've decided that for yourself, well, it's just a question of just following those rules, right? So then again, you would wait, right? It starts that accumulation. Now you can watch for your entries, right? I don't really see one yet, but like that's an entry right there. Could be an entry as is right here through this high. That's a buy stop, right? So now you're in it, waiting to break even. You break even about right here probably, and then the rest gets broken even. Okay, great. So you can keep watching it now. So you watch it. It starts a new accumulation. Beautiful. This is a potential entry, but I missed it, so I'll ignore it. Right, starts coming down. This is harder for an entry, but that's okay. Yeah, I don't see one here. Okay, comes down nicely. Comes up beautifully. Yeah, that's a beautiful entry through this high now. So now you wait, but now it starts going sideways a lot, so you wait for another little inside setup right here, which is probably going to happen right now. Okay, so it doesn't. Comes up. You wait. You wait. There's a beautiful setup right here now on the 1 minute. Let me move this right here on the 1 minute. Take a loss. Keep trading. So on the 1 minute, you actually might, yeah, I guess you missed this move on the 1 minute. So I don't see a clean one on the 1 minute. Maybe if you go back over this, you could find something. Maybe you might argue this point right here. But, you know, on the 1 minute here, I guess I would not be in a trade. But it's the same exact rules. You're looking for the same thing on repeat. It's nothing different. It's just a question of what time frames work for you as a trader. And then make sure you magnify them correctly, right? So for those of you that are new, you really just use the rule of 30 and the rule of 4 at this point. And I'll make some more videos on this to make it easier. But simply, take the time frame you want to trade. Okay. Multiplied by 30. That's your context time frame. And the rule of 4 is take the time frame you want to trade. Multiplied by 4. Where's the multiply button? And that's your validation time frame, right? Like, this can be your starting point. This is as simple as it has to come, right? So if I'm using a 15-minute as my entry time frame, boom, what, you know, times 4, I'll use probably an hourly for my validation, which is what you saw me do when I went here and drew this zone in right here, right? That's where that demand zone comes from. The demand zone doesn't come from randomly picking a random zone I can possibly find inside of here. And then rule of 30, right? 1 hour times 30 is about 30 hours, which is about a day. Well, that's where I went to the daily and looked at the context, right? And the context was beautiful for longs. That's it. Your trading does not have to be super, super complicated, right? But it needs to have some solid rules that set up some kind of boundaries for you so you can stay out of bad shit and in good stuff. And then you need to have, on top of that, a little bit of experience, right? So you can decide whether or not it's actually worth trading. Sol USD. Yeah. I mean, the beautiful trades were along the top side here. Some potentially good ones. And then entered this longer term downside. Started just breaking long. Yeah, I mean, yeah, setting up around here would make sense, sure. Right? If that happened, then yeah, there would probably be a good trade there. One of those weeks where if you don't stick to your invalidation or walk away rules, you're blowing accounts. Yeah. There's a very high likelihood that a lot of people this like last week just blew a ton of like funding accounts or blew up their small little broker account, whatever it might be, because it was just one of those market conditions where whether you were long or short, you were probably eating shit. And even if you got it right, you weren't rewarded for getting it super right. So not following proper rules there for many people likely ended up in blow ups, you know, losing accounts, whatever it might be. I almost lost my mind the last 2 weeks because I was not able to trade because I was not able to find good context. But yeah, you're 100% right. Yeah, that's just how it is. Do you lose your mind when you're waiting for a green light to come up in the intersection? I do. Fucking, we have the longest light though. Like right around my house, it's like a 5-minute red light, and it drives me nuts if I don't catch it, you know, in time. Time-wise, you've lost 30 seconds of your day, but the opportunity cost is way worth it from a business perspective, but no money lost. Yep, exactly. Right, like we can look at anything. So like right now, you guys like throw out a name of an asset, a stock, whatever you want, right? Just to prove this like 30-second rule to you guys. Something that I haven't looked at. Zoom. Okay, sure, we can look at Zoom. Okay. So let's say, because it's a stock, well, actually it doesn't even matter. Okay, we'll go to a daily. So again, daily is doing what? It's been going back and forth for a while. It's likely in some kind of stage 1. Most recently, it's made multiple breaks long. It's moving quite choppy. I'm almost sure I'm not even going to look at this, but that's fine. Let me go a little bit further. Hourly. Yep, it's in a long, but it's in a very, very shitty to follow long. It's very not clear. Went through stage 1, started a markup, reaccumulation, started a potential markup, reaccumulation, starting a markup. No trade here. 15-minute. Yeah, I mean, if anything, this is entering distribution now. So that's ugly as fuck. So I need to see this. If this is going to give me a setup, it's going to happen way later. So there's nothing to look at here. That's it. I will not look at Zoom anymore. All that work I just did, it's for nothing, and it's not going to end up in a trade, right? That's my entire analysis done. I don't know how long that was, but I'm sure it was under 30 seconds. All right, Tesla. All right, so again, if it comes to doing it for my system, I'll do it in 2 seconds. But I also am aware that a lot of people that are members here, lots of them trade on lower time frames, higher time frames. So I'll do my best to show you guys that, one, this happens on all time frames and it's the same exact thing. And two, you're not locked into doing any one thing. So I'm going to show you the opportunities available across all aspects of that time frame. But okay, let's do Tesla. You guys can record this. Ready? You can start recording now. So I'll go to a daily first. I'll look at it, right? Like, it started its accumulation. It's in a back and forth. It's clearly in distribution right now. So it's already both ways. I would probably even jump up to a time from here to check it, but I don't even need to do that because I already know it's basically going 50-50. And I'm still explaining myself. 1 hour, it's just choppy. It's sideways. It's potentially entering accumulation right now. I'd want to see it at least break this high. 15-minute, that's going right in hand with that. That's it. I'm not going to watch this until it makes a break over that high, right? The analysis is already done. And that's with talking you through it too. And I'll do this in 2 seconds for anything that I might be watching. Someone said CCL. Carnival Corporation. Right, yeah, this thing, I actually been watching it. This is beautiful. It went into this reaccumulation, started coming higher. Look at the hourly. All right, same thing. You had a beautiful stage one into beautiful and easy moves, reaccumulation into perfect entries inside of here on the 1 hour, on the 1 hour, on the 1 hour. Follow any of these on a 15-minute with the demand validations, and you have the exact same thing, right? These were beautiful trades, but right now, there's nothing to touch, right? At the moment, it's just, you need to let this thing correct and wait a little bit at least. Actually, it's made a demand zone. What's the 50-minute doing? 50 minutes going a little bit sideways, so now it might take a little bit more time. This was a Friday. So yeah, I mean, honestly, if this can start, maybe, hopefully it can flush out and then start a new stage one and then start a move, and then I can get a trade right here, right? But I know exactly what I need to look for this to actually be a trade. So right now, I would not touch it, right? Airbnb. Yeah, I mean, very choppy, very hard to read. Just started kind of this inside move up here. Hourly's okay, but it just fails to make large moves. It just kind of sideways. Very ugly. Not clear. And then 50-minute for actual entries doesn't look clear whatsoever. So I just skip it, right? And this is kind of the analysis I'll do on anything that I might be watching. But I just want to show you guys firsthand that there's no breakup in my mind. This huge oh my God, edge lost, I'm going crazy, confidence lost when these things don't play out. I'll look at 1,000 markets before the next day. It'll take me whatever that is. 1,000 times 30 seconds. 3,000 seconds. Wait, 30,000 seconds. I'll look at a lot less than 1,000 markets, but even if I looked at that many markets a day, right? Is that 500 minutes? So if I really wanted to look at, okay, that's actually a lot of time. Okay, we're not looking at 1,000 markets a day, guys. But I'll look at maybe 100 to 300 markets in a day and be like, okay, what here is moving? And then I'll have a watch list set up for myself and decide whether or not I'm even going to even follow that thing for the next day. But yeah, I don't like anything here. Hope you're well and hope things are getting better for you slowly but surely. Back after a little break. Thanks for the advice a couple weeks back. Oh, no problem, Zeno. I'm glad, man. Glad to have you here too. Colgate. Yeah, we're not gonna look at more right now, but let's keep going with this. Okay, long question. We have Anton, touching on your point you are making right now in regards to context. For example, the XXX JPY pairs, the last couple of months have been pretty good in regards to context. Weekly time frames being pretty heavily bullish along with the daily. But you are saying if someone trades a 50-minute, then realistically and simply your validation time frame can be 1 hour, which is your high. Then your highest time frame would be the daily. Ideally, you would want the daily to be more so in a phase 2, which a lot have been, and the would have been a high degree validate good context. And also in regards to the 1 hour being a validation for the 50-minute validate. My brain exploded. Sorry. I exploded. Fuck. Okay, hold on. Man, it wouldn't be so. I'm confused with what the question is, to be honest. There seems like it's 4 statements that are potentially questions here. I'm going to have to ask you to rewrite that in a way that asks. But to answer the only question that I kind of see here, you ask, you are looking for longs and the 1 hour creates a demand and also prices displacing away from the MAs. Not necessarily. If I'm looking for longs on a market and the longs are clear, I'll look for a 1 hour, usually demand validation that is moving in tandem with the MAs to what I'm normally used to, where there might be sloping up a little bit. It's not too far extended beyond them. The 20 might be sloping up, the 50 might be going sideways, so it's ready to slope up, and then I'll follow it. But yeah, that was a mouthful. I don't know, man. You need to specify it a little bit for me there. I feel like I got like 2 to 4 statements, 1 to 2 questions. I'm not sure what I read there. Hi, sir. I have 3 questions. First, I use the system as you, but I use a 5-minute time frame, and I have the same 1 hour demand validation. But this is not the rule. 4 hour, I think it's okay for my test. Is it okay? Well, so again, if you're using the rule of 4 for 5 minute, you should be using a 30-minute or like a 20-minute for your validation of demand or supply. 4 hour. So I'm not sure what that is, but the rule of 30 for the 5 minute would put you at 150 minutes, which is about 2 hours. Yeah, so 4 hour as your context time frame. The higher time frame is fine. 4 hour, 3 hour, 2 hour, 6 hour. Those are all fine as your higher time frame. Second question, when you enter stage 2, after you finish stage 1, when the market makes multiple MBs bullish, when the market breaks down for reaccumulation, we call this still stage 2 right away. You can think about it however you want. Think about stage 1 as this, stage 2 is this. That's really it for a bullish market. Okay, so if I'm looking at something like, let's say Dash here, the way I see it, in my mind, the second I look at it is, I'll go to an hourly. The second I look at it is, this was your stage 1, this is your stage 2. This was a stage 1, they can overlap too. This is your stage 2. Here was a stage 1, now you're in a potential and hopeful stage 2. Right? There's not a specific correct box or specific correct time for either one to be true. Stage 1 and stage 2 function together. There's somewhat of a synchronization between them. Sometimes you'll be in the midst of both, and your entry will be at that gray area before the decision. Sometimes the stage 2 will be very clear to you. Everything is very clear, and that could be one of your rules, is that the stage 2 is clear, that you're in it, and that you'll hopefully get part of it on a lower time frame, let's say. So, yeah. Last thing, I see almost in all your backtesting, enter when the market in a stage accumulation. Last thing, I see almost in all your backtesting that you enter when the market is in a stage accumulation if the MA and ICI show well when the stage 1 is going to end after the SND validation on the 1 hour, so not more wait to stage 2 start. Oh, man. I did not get that one at all. I'm sorry. I think from what I'm reading here that you're asking, why not wait for stage 2 to begin and be clear before I enter? And the reason for that is because in some scenarios, and actually a lot of scenarios for my testing, you'll miss the move if you try to get involved once the stage 2 has begun. So what I mean by that is, at this point, here or here, if you're buying, you're not guaranteed in a stage 2. You're probably in a stage 2, but this could easily still be in a stage 1. So if you wait for the stage 2 to emerge, which would be then this, and then you enter here, well, now you're entering very late, and you're actually entering within the gray area between stage 2 and stage 1, rather than the gray area between stage 1 and stage 2. I want to enter in this gray area, or in the very, very last final cusp of this area, because that means that I can build a profit cushion for then future price. If I'm entering here, where I'm waiting for stage 2 to really start, now I'm on the cusp of a gray 1, right? Because if you've seen a lot of my testing, what you'll see from it is that as I get into a trade, I already have 2 things that I'm aware are going to happen. One is you're going to get that kind of insane move away that then builds that profit cushion, or 2, you're going to undergo further back and forth before a setup. And when this happens, it can take you out. So if you're getting involved at the end of a stage 2, or at the, let's say, what you believe to be the start of a stage 2, because it's super clear now, that could be the start of an intermediate stage 1, a reaccumulation, a back and forth. And now you stand the risk of, well, if you took a long here, you're standing the risk of losing that trade. So it's better, in my book and from my testing, I want to get involved usually at the end of a stage 1, or what seems to be like the gray area that's about to enter stage 2, or that is stage 2 but not 100% confirmed yet, because those are the best trades, right? Those are going to set up those best blow ups, and then you get to have a profit cushion to then experience future growth. What is the theory behind protecting under an inside candle close / open when setting the SL? Sometimes to do with the volume inside the ICI candles. Yeah, basically that. There's really not much to it. I want to have over 1 ATR, under 2. And then if there's some kind of clear price action that showed me some kind of stoppage of price, I'm happy to put it there, because for me, if it gets back down there, then it's probably lost whatever orders were there to hold it up. Would you take a look at FinViz for stock sorting, best loser or gainer? Yeah, you can always look at stuff like that. You can even just look at this. You can just have the stock screener of TradingView down here. Like click on yearly, like let's see what's doing the best yearly. This thing, right? You can look at it and say, okay, is it worth trading? Like, and just do your analysis. So like, it's in accumulation. I mean, right now it's really far up. I probably wouldn't even touch this. Yeah, this needs time, right? So I just go to the next one. What's this one up to? Right, so this is just too choppy. I don't like it. This is pretty choppy, but it is bullish. And this is just choppy. So, great. Right, this is not ready for a setup yet. This one has some light. Let's see what the daily is doing. Yeah, daily's in accumulation, just started coming up. Looks okay. The hourly went through again. So again, just visualize the stages because of what's going on. This back and forth action is stage 1. Stage 2 began, failed to do anything. So it entered stage 1 without even needing to do back and forth until it went back and forth, right? Entered the potential stage 2, and now it's in a short-term stage 1 to hopefully continue a stage 2. So that looks really good. And then at the same time, from a demand supply, you had demand validation, no supply yet at all. So demand is holding this market up right now beautifully. 15-minute context is actually there. Beautiful bullish market. Clear stage 1. You're in the cusp of entering stage 2 right now. So where can the setup be? Well, actually, if this comes down and then starts the week like this is actually a great setup. So now I'll put this in my watch list. Carvana. Right, and there you go. Now I have something to watch for. You can set an alert, whatever you need to do, but this is great. Like, this is a setup that I'd be happy to trade. If it can set up, of course. I don't like how choppy it got here, but that's okay. Like, hopefully this comes down a little bit, comes up, and then boom, you get an entry right here on Monday or Tuesday, right? Because this is now a clear market. Yeah, but you can always do that. You can just use the stock screener here though. Very easy. All right. After 600 trades, I have full confidence in my system. I know exactly what I'm looking for, context and entry. Your new ICI videos help me make my last refinements for now. We'll continue to get to 1,000 trades to build more confidence before the new year. Then I'm going to get funded with a Men Funding account. I have been waiting. Thank you for all you do. Hey, that's my boy, Jay. I appreciate it, man. Yeah. You look good, man. Guys, remember, what's the test to see if an equity curve is good? Or if it's doing what it should be doing. Does anyone know the test? Yeah, accumulations, or you can ICI it and make a fuck ton of money, right? If you can ICI an equity curve and make money, then you're probably in a good spot. ICI. Looks good. Look at this. It's just beautiful. It's just absolutely beautiful. Up good, down bad. Test approved. There you go. Exactly. I'm trading a 5-minute entry, 1-day zone validation, and then a 20-minute validation. That's cool. Yeah, that's fine. Like I said, I taught this in some of the most recent Webbies, right? Here's your 3 time frames using rule of 4, rule of 30. Hey, this actually looks like a good public YouTube video right here. now that I'm drawing it. But rule of 4, rule of 30, and then within that, you can, of course, play around, right? So again, if you're trading your 5-minute entry, on average, you should be looking at a 20-minute validation and a 3-hour context, but there's absolutely nothing wrong with having a daily or an 8-hour, because this could just be suited to the person and the preference. 30-minute, 40-minute, 1 hour, etc. And then even if you're even crazier, you could even have entries on the 1 minute, the 4 minute, the 3 minute. I think this is what Dan does with his Triple M system at the moment, unless he just decided to stick to one time frame now. But right, this is kind of how this is how Dan's system literally works right here, pretty much. I'm pretty sure you can confirm or deny. Dan, no one will hold it against you in the court of law, but I'm pretty sure this is what it looks like. If anything, you can get rid of this, and his system looks like this, right? Like, this is literally a blueprint to systems. I think this is a beautiful schematic right here. You guys take a photo, okay? Here's your signature. But this is really all it is. Like, you don't have to make it super complex. There's not like this whole like language that you need to figure out, and like, this is really all there is to it. And then over time, you can build it out to get better and better at it. Stage 1 and 2 are, or the re-Wyckoff schematics. The first one being the kind of consolidating stage, and the second is the mark up or mark down. Yep. Stage 1 and 2, if you want to go retail, is consolidation into trend, right? Consolidation, trend, consolidation, trend, and then trend could be either direction. That's really it. It's very, very simple. I just use the phrases to describe what I see in the chart at any given point, right? Hey man, would you consider looking for longs on UCAD if the time frame entry was 5 minute? Well, I don't know. Let's do the analysis using the blueprint, right? So again, if you're using a 5, you should be using probably a 20 and probably like 3 hour or 2 hour. So what's the 2 hour telling us? So again, you can use multiple time frames too to figure out where you are if you really want to. But the 2 hour at the moment is telling us redistribution, right? And at the same time, it's very wicky, very ugly, right? So let's jump to a 20 minute and see if we have anything for distribution. 20 minute is ugly as fuck. Okay, we've done the work. I'm not following this whatsoever. What am I going to follow here? Right? I don't see a clear trend. I don't see clarity in regards to what price wants to do. So I would not even touch this. So the guy asked, would you look for longs? Not at all. How would I even jump to, like, I don't even need to go to a 5 minute to know I'm not trading this, right? Because what am I trading here? What's the trade? Look at this. What is this? This is, in my book, a stage 1. This is a stage 1 you're in. Like, this whole thing. Any trade you take now, whether it be short or long, is going to do what? Your likelihood is that you're going to take a shit ton of losses, right? Meant, should we go through the whole course and start demo trading and testing with ICI, or would you say that your old system before ICI to start testing and demo trading? That's up to you. I share everything that I personally do, and every evolution that I have, and any question I have, I show you guys all of it, and then I try to define it for everyone, and I do the kind of question and ask and answer, and then try to put out more course material to go over exactly what I'm doing in any given moment. All of it works. I made money trading very, very early support resistance that I don't even teach. I made money trading my 1 second, more than enough money that I could even imagine. I moved to the ICI and made fuck tons of money with the ICI, and it's what I currently do. And it's the system that is best operated for me. And I'm sad, personally, that I didn't learn about it quicker. Let's put it that way. I'm sad that I didn't figure that out for myself quicker. The way you have to think about it is, if I'm doing what I'm doing right now, it's because I, in my personal mind of minds, think that it's the best possible way for me, right? So that says something. And you can do with that information what you will. But there's nothing wrong with doing absolutely anything that is taught here. Holy shit, needed this one with gray areas for sure. Got it back to some more right after the Webbies. Yeah. So maybe that's something that... So again, guys, notice that there's a lot of things that I can always teach, talk, answer about, whatever it might be, but it's like these little moments where we get to go over an example, like stuff like this, that gives you, hopefully, a fuck ton of info or something to go and check. Or even like when I check something like UCAD here, and you saw that I didn't even have to go to this 5-minute time frame before I said it's complete dog shit. This market is ugly. Like, geez, this is fucking ugly. And small things like talking about, looking for the entry between the gray area of 1 to 2 is oftentimes where the best entries are found. Like somewhere right here is where the entries are, right? So if you want to imagine that from an actual visual perspective, is here you have a stage 1, here you have a stage 2, but you don't know when the stage 2 is going to happen. So what happens is usually you'll wait for maybe something like this, and then you'll assume, because this can continue forever, right? This can continue to be a larger stage 1, but you assume that you've entered the gray area of the potential, and you take on risk. You take on the risk that you're willing to lose. You take on that risk fully, willing to lose at the prospect of the reward for this, with the understanding that this is how trends move, and then if you just follow simple rules, you can get to the point where you catch enough of these and you start making a fuck ton of money, or, you lose that and then great. Or just it's a poor stage 2 that kind of does this, and then great, you don't get to trade it, right? This is just how markets move. Like, this is really all markets have ever done. It's just a question of, have you done the work to see that yet? Can you see that on the charts yet? Have you understood that that's really all markets do, and that all you're doing is refining your ability to enter that? On webinar 110, should I move to the remastered course now and then come back? You can go to them at any point. Okay, Satchel says, sorry about the questions within the questions. No problem. Let's see what we got. Let's see what you tidied it up to, okay? Basically, what I was asking is if you make things really simple, as you say, and only watch the daily, the hourly, and the 15-minute, sure. For execution, then ideally, good context would be the daily being in a phase 2. Yes. Technically, yes. A lot of the XXX-JPY pairs have been heavily trending bullish for the last good while for me, and what I'm testing is the daily 4-hour and 1. Okay. But there wasn't a question here. This is still a statement, right? You're just asking if it's ideally the best, if it's best to be in a phase 2 or the start of a phase 2, and the answer is yes. You don't want to be late stage phase 2 though, right? So like for instance, if you're on a daily, right? If you're entering the daily here, here on your lower time frames, you're doing it right. Why? Because clearly you're in a potential stage 2. You've entered a short term, let's say stage 1, so you're in that gray area because it's kind of a reaccumulation, but it's part of the accumulation and it's moving along and it's within the MAs and it's all good. Then you're in a good spot. But if you're starting to now watch for longs because the stage 2 has started here, well, guess what? You're now going to enter the chop because you've become overextended. You've become kind of midterm late stage 2, where now price can either do this or blow up, right? Very simple. So if you get caught in that, then you're going to take a lot more losses. But then if you wait and you start getting involved around these points again as the MAs catch up and you start getting long again, great. If you wait for the break and the start of a stage 2 and then start getting involved here though, because now that's clear, let's call that clear stage 2, now you're fucked. Because now you're back in that scenario where, yeah, you might get the move, but you're probably going to get the chop. And then you get the chop, right? So like the times where I want to watch, if I'm trading a 15-minute chart, right? Do your multiplication tables, 1 hour. Let's call it 1 day, right? The times when I want to get down to an hourly and start watching for validation, as I'll show you, is around here, maybe here, maybe here, definitely in here, definitely in here, definitely in here, definitely in here, and then price breaks down. Right, these are the points that I really only care about when it comes to now jumping to my hourly. Because I know that we're in that prospect of potential continuation of a stage 2. Sorry, I'm still a little bit sick. We're in the prospect of that still potential stage 2, but we also have the upside potential, what we can call the free money space, right? We still have space to move. We have reason to go higher. We have the clouds of liquidity before we even have the run, right? So before I even consider probably jumping to an hourly, I want to see a market condition that's like in maybe even here even, right? I want to see it in one of these criteria before I look at it. I'm still kind of confused on how can you tell if you're at the end of a stage 1. bullish break for bullishness. Stage 1, whatever it's doing, back and forth, don't care, long hair, don't care. Bullish break. You can assume potential entry of stage 2. That's it. And then go confirm. That's the best place to start. And then again, I get the same question. In the one-on-one, you mentioned about using SSC, but it doesn't seem like you mentioned anything about the SSC in the recent live trading videos. I think I'm going to see if actually this is the case. Anyone that's been here for, let's say, any amount of time, that's a little bit longer than a little bit amount of time, can anyone talk about this specific question where someone asked me, because in that one-on-one, since I mentioned SSCs, why doesn't it seem like I mentioned anything about SSC in the recent live trading videos? I'm going to see where I am with this. Maybe I did miss it. Okay, so Victor says does not have to return to an SSC. That's very true. Yes. Very good. Yep, and John says it's a blueprint for patience. We can use it for context. It helps determine the context for someone else. Okay, perfect. So gladly I did not fuck up here. And now I'm going to go a little bit further for the guy that asked the actual question. As I've answered a few times now, and hopefully you have this answer written down for yourself now, it does not have to do that SSC thing whatsoever for it to be considered stage 1. In the one-on-one, and I specifically said this to the guy as well, I gave him a framework for patience. I created a framework for him so he can stop entering every bit of price action because he's not used to, nor has he experienced how markets move. So instead, I gave him a blueprint to wait for, because now what it's done is it's forced him to not trade every bit of price action and instead made him wait for a specific thing to happen, like an SSC before the stage 2 start. And in the case that it happens, he can start watching it. It was a blueprint, a framework for him to be able to walk away, because that client would not be a client that was trading here, and etc. All the areas that I just discussed here on the UJ chart. Instead, that's a client that would be looking to trade here, no matter what. So instead of making him trade every piece of price action, I gave him a rule, being the lower time frame has created a back and forth that has also created some kind of SSC that is then rebroken to then follow the market. Because now it forces him to wait. I personally don't need to wait for something like that. I know the kind of price action that I want to get involved in when it comes to a market that's moving in a clear trending way. That's really it. All right? So you might actually have the same kind of problem that the guy has, where you can't tell personally when it might be happening, so you end up trading everything. That's a big problem. So you might be someone that needs to use that framework of patience that was taught in that one-on-one for that reason, right? That's how you want to think about it. How do I tell it's the end of a stage 1? I don't. I operate within the stage 1 to 2, but I know the markets that I want to do it within, because I know those markets are likely to now enter stage 2 due to their context, right? I do it in market conditions that are clear, so even when I'm wrong, I might still be able to get a break even or a win out of that trade. I know stage 1s could be coming to an end because, well, they could be intermediate. So when you have this breakdown here from a market that's very clearly doing something, I know that this is going to be almost very likely, because this, when it breaks down, enters what you could call a stage 1. I know the stage 1 is going to very quickly result in the start of a new stage 2 because of where we are and what the market's doing. And if the lower time frame undergoes some kind of clarity in regards to demand validation or accumulation, it's very likely going to result in quick movement higher. So when the market here undergoes its back and forth nature and then starts breaking long, breaks long, is on the upside of the MAs and makes a demand right here that validates, I know that this is going to start a very, very clear and very likely stage 2, because the higher time frame is in that station, the lower time frame is now completed with whatever it was doing here on its back and forth and made it clear, and now I can confirm it with a 15-minute. So again, there's not, I hope you're hearing this, because there's not a specific like little one-time thing where it's all going to save you. Like, if the RSI is over 80, the stage 1 is complete, right? If the MB created, it's a stage 1 complete. That's not how markets move. I hope you realize that if everybody thought that way, or if there was a rule like that, everyone in the trading space wouldn't have a problem trading, right? If trading was as simple as when this happens, you can take a long and you're going to make money, trading wouldn't exist really, right? Because of the nature of how it works. So yeah, there's not like this one tick rule. This is why people that sell EAs or like signals like that along those lines, or try to promise you a true rule-based approach that you can follow right now and it will always work. That's why those things never end up working out for those people, even though they sound very good from a marketing perspective, right? Because the reality of the market is, well, it's built upon a ton of data collection on your own end, a ton of unique approach based on your end, and it's about letting that experience kind of grow within you and refining it over time. That's really it. That's not something that's just transferable with a click of a wand or the click of a button or the click of an indicator, right? That's why many people like that buy those buy and sell indicators, right? Eventually do what? They stop because they don't make the money. Anton's about to take a long in front of our eyes. Yes, basically. There you go. So yeah, this is basically Dan's system, right? Like, and even some of you might not even know that your system is as simple as this, but once you do it, you start realizing that this is all it really is. Right, that's it. And then you can extrapolate. So like, let's take Dan for argument's sake, he'll look at not even 5 minutes. He'll start, let's say, probably on a daily. So he's looking at the upper end of this, or even a weekly, or even a monthly. It doesn't really matter. And he'll validate something and say, okay, this is potentially happening. And then eventually he'll find his way, very likely, to an hourly or a 2 hour that's going to act as what you can call his main station that's going to validate these things. So these things might be doing a number of things, and they might not be clear, might be clear 50-50, but then the 1 hour, 2 hour, which is really the rule of 30 of this, is going to either validate that market for him to even jump down lower, or just be like, no, this is not clear at all. Because what you'll see is if he does release videos, almost always, I can guarantee you can keep this on your in your mind as he releases a video, you're going to see him eventually get to the hourly or 2 hour or 30 minutes, something around this right here, and that's going to be his cutting point, the cutting point of deciding whether or not it's even worth the step down, of course, right? The weekly and the daily are not going to be the places where he goes, the weekly is not clear, so I'm not trading it. Because on the weekly, he might see it go not be clear, but he might be just like 55% lean bullish, let's say, for some reason. The 2 hour, the 1 hour are going to be the things that validate him going lower at the very end, because that's the closest thing that's tied to his actual time frame of entry. So it's going to be the very best likelihood next measure of that lower time frame's delivery. And then he'll jump to probably a confirmation, which in some cases I think his validation is on an hourly, I think, or a 30-minute. But again, that's the same thing that's happening here. He's looking at this 20-minute rule of 4 validation, and he's taking, let's say, the upper end of it, because maybe he's okay with all the potential bullshit, right? So the lower the time frame you go, the less bullshit you're okay with, right? Because look, if this happens on a 20-minute, well, the move is either going to start now or it's going to fuck off. If this happens on an hourly, the move can now play around for a while, even go down a little bit, up a little bit, and then start a move. But he's okay with that because he's aware of how he's going to follow the 5-minute. Because on the 5-minute, what does he do? He likes to build a further context and much deeper story using zones. So he actually prefers the 5-minute to have more info like this, so he can build out a story of SSEs and 2.0s, right? So that for that reason, he uses that 1 hour or the upper end of the rule of 4 to do that, because he doesn't need to get the trade here. He wants to let this play out, right? And again, please feel free to correct me, Dan, if I'm wrong, but I'm pretty sure this is exactly what his entire system looks like. This is why his system works the way it does. Maybe he doesn't even realize this is how his system works. Maybe I just gave him like a little equation, but this is what's going on the back end, right? Maybe. All good. Okay, he said yes. So we're good. I just feel like waiting for a 1 day just throws me in a good context automatically. And yeah, Dan got it. I've seen his video like 6 times, even though I'm not looking for a 3-minute. Yeah. Yep. if I enter on a 1 minute ICI and use a 5 minute for demand confirmation, do I use the 30 minute for higher time from context or 2 hour? Same thing. Yes, 30 minute up to 2 hour up to 4 hour, right? So if you're using a 1 minute time frame to enter, you usually want to be operating at a 5, maybe 15 minute validation, right? And you want to be operating at, very simply, a 30 minute up to probably the highest being a 4 hour, and you could go higher too because maybe you like the further refinement or the stages of a market to actually decide on trading that 1 minute or not. So yeah, right on. So like for instance, if you're on US 100, right, and then you're in, I mean, yeah, so honestly, this is fine. So you had a market that's moving bullish, 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 kind of starts breaking back and forth a little bit, breaks bullish, breaks bearish, breaks bullish. Maybe at this point you consider accumulation. That's your higher time frame complete, right? You know your higher time is in accumulation, and that's decided very likely around here. So you can assume that you probably want to make a run on the higher time frame here without having to go higher. And now you can go to your 50-minute or 5-minute to do validation of demand. So let's go to a 5-minute. So that means after this point, we can start validating demand given context. So context is clear. Then demand validates first time, I would say here. Yeah, so that's where you'd start following. So we're going to go look at that on a lower time frame in a second. Then it breaks down for a reaccumulation. I would say this is all ugly. Maybe you start watching it again around here, right? Starts validating kind of demand to the top side. MA is kind of sloping upwards. Breaks down, breaks up. 5-minute demand validates again here. Maybe you can start watching there. Breaks down, breaks down, breaks up. Breaks up, breaks down, waiting, demand validates again here. Okay, so those are all the times you might be watching on a 1 minute. And then I don't know what's available, but yeah, this is ugly action, so you wouldn't even trade the 1 minute there. Then here, what happens? You have a low, starts making the MB run. Yeah, so maybe even a long over this high is actually okay. Like if you took a long here, I don't think that's bad. Starts moving, instantly takes you out, beautiful. Then nothing else to do again, enters this like back and forth, starts coming up again, breaks down, nothing to do. So you wait for your next validation. Okay, you get another validation, reaccumulation into accumulation model, starts breaking up. This is actually a decent trade along the top right here through this high again. So again, up to you, comes down. Should set up a trade like right here, right now. Yeah, that's a great trade. Like through this long right here, if it can go sideways for a sec, right, there you go. And start your move. So I don't know how you're protecting this. Probably this low. Actually, probably getting here. So -1 there. And then this probably protects this low. Yeah, and then you get a starter of a move. Never comes back to break even. You probably take a partial. I'll be taking a partial probably there for a 1.1 RR gain, and the rest gets trailed with the MBs, and you get taken out at the rest right there for an 8.7, so it's 4. So you make 5 RR on this trade. Great, and you just lost, what, like 1, maybe 2. Was there a trade here to take? I didn't see one. So like, yeah, you're up 3 RR for the week now. So it's the same thing. You just use the ones that make sense. Use this formula. Take this, multiply by 4. Right? I don't know. Take this, multiply by 4 for this. And take this, multiply by 30 for that. I guess like this. Whatever. You know what I'm drawing. You guys know what's up. Shit, my first video I saw was the volume profile in public. After that, I moved nowhere else. Nice. Hi, Anton. I dropped the question and picture in chat at 11:39, but you might have missed it. Yeah, you can repaste it. Comparing Rune USDT and Sol USD. Sol on the daily seems especially overextended, whereas Rune looks like it's undergoing a clean stage 1. Personally, I think it might be a trade on Rune. Yeah, Sol's looking good for a setup on a 15-minute. It's looking good. It says redistribution, but this is clear a reaccumulation just from a standpoint of like institutional basis. Looks really good. Yeah, this can set up really nicely here, like so. I can see that. And then you're saying Rune looks better. This is ugly. I have no idea what we're looking at on Rune here. This is terrible. Yeah, I would never even compare those two. This is hands down the better market right here. Contextually, the way it's moving, yeah, I have no idea where the where Rune or why Rune would ever be considered in this case. So when Sol went to all-time new highs, this thing went down. As this thing only makes a tiny pause in the market, Rune is down like 20%. Yeah, I mean, they might both want to flush out for a little while, but this is going to be weaker. I don't see it. I don't see Rune as better. This is fucking ugly. Back and forth ranges, no determination for where we want to go. A lot of back and forth. Only most recent is accumulation. MA is just ripping back and forth for no reason, just chopping around. Yeah. If this becomes good, it's only after it makes a move, starts a move, comes back, demand validates, and then you can start watching it on a 15-minute around here. Maybe. But even then, if it did all that, look at where you are. I don't see it. I do not see it. Not to sound silly, but what do we mean by validation? I just want to be 100%. The remastered course. Type 1 to Type 4 validation. I'm here about 10 days, so I guess I'm not in that category yet. Yeah, not yet, buddy, but you're going to be there very soon. Don't worry. What do you classify as your context invalidation? Unclear price action, non-supporting models, non-supporting movements with the or away from the MAs, and other factors that are probably running amok right now. Indeed it is. Higher time frame has to have some type of reason, and then the X to hour based time frame helped me identify whether to go to 5 minutes. Yeah, there you go. Okay, very cool. I doubt Anton would ever discourage someone who has backtested a system using his stuff or not, who's tested it 500 times and is confident. Yeah, I would never do that, of course. I learned patience by losing. It's a really good teacher. If it's not clear, I just pass and I'm okay with it. At one point, I take anything because I wanted to trade so badly. Now I'd rather take nothing than take an unclear guess on a trade. That's how I've grown. Yeah, that's huge. That's beautiful. But exactly, right? The cool thing is you can either listen to me or you can just go through it and see that, you know, not having patience or trying to predict the market every single day or trying to be in every single move, or trying to, like some guy said, USD CAD might be good for a long, right? Like, so again, it might be, and depending on your system, maybe there actually is a long that you can find here, but like this kind of price action, I would never even touch or even consider touching, right? I would never even go down to that time frame before I even like decide that I'm not even going to touch this market. And that's because I've already learned from my own system what I want to trade and where I want to trade it. But for some people, it's like, damn, I really want to trade. Nothing's moving, but the only thing that's showing me potential movement that is like in conjunction with a screener and you know a few time frames are confirmed is the UCAD. So I want to take a long here. It's like, okay, well, it might work. It might work. But like for me, I would never want to put my money at risk on this, right? Because I know if I take a trade here, I know the likelihood is potentially a loss. Almost guaranteed. Higher than the normal likelihood of my normal losses. And that means that if I want to get this trade right, if it does want to go long, I might have to take another trade here because that might still be a good trade. And then another one here because that still might be a good trade. But now the problem is, am I going to be willing to take these potential 3 losses for the potential of a run here that's very likely going to result in how much? 1.1 RR or more gain. Well, it starts to become very clear that I don't want to do that because now I know that I have to get involved maybe a few times because of this price action to even potentially see reward. And even then, very likely miss it because I know how markets move. They don't have to give me that setup before it moves. They can easily just make the move. So the question is, am I willing to take on risk on this pair multiple times potentially for the reward that it might offer given its current state? And if I ask myself that as honestly as I possibly can, the answer is hands down every single time, fuck no, right? Look at this. My eyes don't even know whether this market went up or down in the last 20 candles. I can't tell, right? If you ask me, based on here, where was it here? I'll be like, well, I don't know. I need to follow the candles, right? I want something that's clear. I want something that's showing me what it wants to do. For me personally, I take SSC with context and get involved in the zone, and I'm testing an entry criteria which works best in my data collection sheet. Good. This makes sense because Dan looks for S&Ds to hold. I just look for ICI, so I just need less data. Exactly, right? So you and me potentially, Max, right? So we want to see basically a market that's doing this, and we want to see this at somewhat of an early stage, but we don't want it to be doing this and then give us a setup like this, right? So that's why, for instance, I would not trade something like this because I have no idea where this is going to go. Or maybe it sets up here. So I don't care about a lot of sideways or a lot of back and forth or a lot of nice buildup, right? But Dan doesn't want to jump down and see a market condition like this and go, boop, there's a triple M, enter. Because now he doesn't know what is likely the next move, right? So he knows that if he takes this, there's a chance, like I just showed you here, that he takes a loss here, a loss here, a loss here, a loss here for the potential reward, which is now no longer worth it. So instead, he'll have a confirmation or a validation that'll allow him to get down when price isn't here, but instead when it's here. So now he can say, okay, we've undergone all this. We've undergone some, let's say, intermediate reaccumulations. We've undergone the fractalized MB, and we're moving from here. And now triple M's happening right here with, let's say, the most recent validation point here. He knows he's taking a trade here, maybe here, for this upside reward. And he knows that as he's taking that, those are going to be the final points of price determining whether it's ready or done playing around, right? So that's why we might confirm here with a much lower validation to be closer to where the entry might be ready, and he might do something like this. Anton, are you ever going to stop trading? I don't see why not. I mean, I don't see why I'd stop trading. I don't see why I would. I enjoy it. So, and I know exactly what to do. And if the market's there, then the market's there, right? It's like money that's just on the table. It's like you walk into a room, okay, or you walk into a mansion, a tour of it, that's been abandoned for, let's say, 60 years. No one's walked into that mansion for 60 years. So you know whatever's there is it's just done. And you I don't know, it got transferred into your name, and you walk in and there's fucking diamonds and rubies that are worth a few million right there. And you walk in and the tour guide or whatever, the lawyer, he goes, oh, right. The person that abandoned this actually just left this and he didn't want it. He said the first person that comes in can take it if they want. I mean, do you take the rubies and diamonds? What do you guys think? I mean, yeah, why not? And it's the same thing with trading, right? I'll look at something and I'll go, this is fucking shit, and I'll walk away. But if I'm looking at something and I'm like, Jesus, who left these diamonds and rubies on the fucking table? And everything's screaming at me, hey, just take the diamonds and rubies. Well, I'm gonna take those diamonds and rubies, thank you very much. Right? Because it's at the end of the day, it's free money. Now let me ask you something crazier, guys. Ready? I'm gonna make this anecdote even nuttier. The lawyer that you're in there with goes, but listen to me, Anton. Here's the crazy part. 3 of these rubies and diamonds are worth $3 million. 2 of them are worth $30K. And 1 of them is worth negative $500. And you can only pick one up every day. Are you still going to start picking them up? Dalen says no. Well, I would, because the trade-off is risk 500 and you can come back the next day for the potential of what, 6 mil? Now, again, that's not necessarily how trading works, but the point is, like, at the end of the day, when you're trading and you have a system, it's money that's left free on a table. That's really all that's happening, right? It's gems and rubies left on a table. There's a few stipulations to them, right? But if you're there, you're present, you know what you're doing, then there's no reason that you have to stop. Like, unless you literally have time to do something better, right? Let's say every day you've come back. It's 365 diamonds and rubies. You've come for 150 days. You've amassed $600 million. I guess the next day you don't have to go back. You can spend some time somewhere else, right? Maybe this mansion is a few hours away from where you live, and you're like, okay, I don't need to make the commute today, right? So yeah, maybe for those days you take a break, a longer holiday, whatever it might be. But at the end of the day, like, if it's there, it's there. Reposting my question from John. Let's see. How would you have traveled UJ on the 1 minute on November 16? Am I good to look for shorts on the 1 minute? So again, like, I'm not going to go by a play-by-play of that day again like I did last time. I think that's much more better for something like a one-on-one, because I don't want to, like, jump in there and just start going. But, so again, I don't see the MAs on here. I personally like to have the MAs on for my ICIs. This is very, very... I don't like any of this price action. I would not be entering any of this probably. I would consider, likely, given this 5 minute range, because that's all I'm working with right now and have nothing else to do. Oh, you took these on a lower time frame. Okay, so we're not taking them off of a 5 minute. I see. I mean, I have to open this up myself. I'm just... Yeah, would you have done anything differently with MAs? So I don't see the MAs on here, so I don't know what I would have done because I can't see them. Or S&D validation. I'm considering adding these to my system. Would be interested to see how these factors might impact my trading. So again, I use them for a reason. I show you the reasons, right? I've released like a few videos in the last just week or 2 weeks with a lot of breakdown. And actually just now, recently, I released a system section with the part 1 of how I trade any market. And part 2, I'm going to try and release it this week for you guys. But like in this video alone, right, I'll walk you through exactly how I use those things. So I can't comment on specifically what you're doing without those things, because again, I'm using specific tools for a reason, right? But what I am seeing is what, you're bearish on UJ. So is that smart though? So you're trading a 1 minute, 5 minute, maybe like a 4 hour as your higher time frame. Yeah, I guess it's okay to be bearish on it. I wouldn't be bearish on it this day, but I'd be bearish inside of here. Actually, all of this is fine for bearishness as a distribution. So what does that put us on, like a 20 minute? So like, if anything, you should be... Oh, but the 20 minute would be your higher time because you're trading a 1 minute or 30 minute. Sorry. My bad. 30 minute. Okay, we can get rid of all this. So on the 30 minute, you'd probably be okay with trading any of this price action in here, and here, and here, maybe. It's very ugly. I don't see anything here until maybe this starts moving, and then here you might start watching it. You might start watching it here as well, below it, and then you might watch it here. So 5 minute validations now. Let's see. Ew. So 5 minutes is just super ugly. So you wouldn't watch this. Here, you might start watching the 1 minute, maybe around here. And then you start watching the 1 minute around here, around here, around here. So these are all valid for 1 minute. They never make demand zones. So yeah, you should be able to catch a trade on the 1 minute inside of here. I don't know where that sideways action that you found was, but I don't see anything else that's clear. I don't know. This doesn't present a good trade at all. you start watching it as it comes down. You start watching it. So that's a decent trade right there, like a sell stop. But actually, the 20's dog shit. I would not take this, actually. I'd wait. Okay, that's good. So I would take probably a sell like here. I don't know if this is the price action we're talking about. Okay, so that ended up being great sell. Yeah, that would have been a good one. Then this sell here is okay. I'll probably skip it. This is hard to get positioned on. This is the first time a sell is happening past that point. So I think these are the only sells I see. I don't know where the... You said November 16th. Oh, November 16th. Oh, that's super far back. My bad. I don't know. Try to follow these rules right here. I think that if you want to do like a play-by-play of a day or something and work through the day and see what's available and how I use my system there, I think that's a one-on-one kind of thing for sure. So let's try to set something up there. But yeah, I don't know exactly... I can't do much with this, right? Because for me, I'll use my demand validation, supply validation in regards to the other tools as well. But theoretically, if anything, you're probably talking about watching a lower time frame around these points. So that makes sense for the win. But I don't know what trades you're actually taking inside of there, so I have no idea if they're even good. Then probably start watching around here. Like, I see a 1 minute entry should look good, guaranteed in somewhere here. Like, I don't know why there's no 1 minute trade inside of there. Maybe it just didn't set up, but that's where it looks like it should have been. Yeah, I can't do much with this right now. Sorry. Sold clearly more strength. Already past this reaccumulation phase. Yeah, the Rune just looked really bad. I was obviously waiting on a stage 1 completion for Rune. But even then, right? Like... yeah, maybe. I don't know. It's pretty ugly. So remember, I traded like a ugly coin a few weeks back. But the coin was ugly only from a illiquidity perspective, not from a context perspective. I don't know if you guys remember that coin, but the context on it was insane, how clean it was. I wonder how it's doing right now. It was Rollbit, right? How is this thing doing nowadays? Yeah, so it kept going, didn't it? Nicely done. It did keep going, and now it's in the gutter. So now I'd ignore it. Whatever. I see you have images on the journal. Is before and after, I assume. Maybe if we can take a look at the before and images, it would be interesting to me. Well, sometimes they're just images as the trade is starting, because I just like to document and know where it is. Like, this is just the NAS 100 trade. Right? This is just this one. Nothing more. It's nothing crazy like that. NAS 100. Yeah, I'm in a long on it right now. Looks really good. Beautiful longing market. Beautiful reaccumulation. Stage 1 and to start, move higher. Hourly was clear on the upside, then started kind of going sideways for a while. Recently started breaking long, started breaking long. So happy to start following on this potential follow through. And then the 15-minute. I mean, honestly, it's a little bit ugly, but I like this run up. Very clear that this is like its own institutional range, whatever you want to call it, right? There it is. So you could see some easy follow through, and then most recently you kind of underwent a little bit of back and forth here into a bullish break into this short-term setup right here. So now I'm in this thing. Get rid of the lower time frame ones. So now I'm in this thing right here off of that 15-minute setup and looking to hopefully take it long. See where this thing goes. Hey, man, I was backtesting a lot of the ICI setups, and I want to ask you, do you look for a 1 hour MA to get tight or the 15-minute? I don't need them to get tight in any way whatsoever. I just want to know that price is not displaced too far away from them, and that the averages of them are not sloping down heavily. Like, I wouldn't look for longs when there's demand validations like these in this price action, right? But then I'd start watching here because of the price action, or here because of what's happening with the price action. I would not watch for the demand validation here. I would consider it. It depends on how it happened, but there wasn't one. And then this demand validation, I would consider it. Why? Because they just started going sideways with that candle. So like already here, if you're trading like a 30-second chart, you could probably get a trade off this, right? Like, I don't know what's actually available inside of there. Where's my replay mode? So like we wait for the big move up. Here, I'll go to the 15-minute now. Wait for the big move up. Whoops. So you get your demand validation. Jump down. Right, and then you can take a look at your 30. I don't know, what's this up to? A lot of back and forth into accumulation to very clear accumulation. So now I just look for the, hopefully a setup like this, or like maybe something up here. This is a harder one. So one of the first setups that happened on this thing would probably be around here or here, but those would be very hard to catch because the validation probably happened around here on the 50-minute, I believe. First bullish break. So in this case, the 50 is almost heading straight up. The 20 is almost straight up. So the reality here is if you took this, yeah, it can keep going, but it's likely going to do something like this and then give me a setup. So that's what I'm used to seeing with MAs. Like I usually like to see 20 come down a little bit, 50 maybe goes like that, and then I can look for the next move. So again, there's not like a special thing behind the MAs that's just like determining everything, but it's what I got used to in regards to what I want to see from price. So there's my down move, and then hopefully it comes up now like that. Right now you have the 20 leveling out while the 50 is coming sideways. Now this is a long head take through the highs, right? Protect the low and then just look to take it, hopefully. Trade still looks good. 9.2. Yeah, so you can still protect this low and looks good. Now it doesn't look good anymore, so now you wait. I was going to say, this is a fine setup right here, so you'd be entering this either through the buy stop and then gets topped in here or whatnot, but if you skipped it, then whatever. Now I can create another setup. So now you have an option of buy stopping this, or if it goes sideways, but again, you have this just going like straight up. This just started moving up, so if you envision this, if this happens, then this is going to look like this, and this is going to look like this, which means the likelihood of the next move is like that. So again, based on what I'm used to, I'll just wait for this kind of setup instead, because this is not clear to me now, right? So this to me would fail, so I would not take it, right? This should fail. If it doesn't, then whatever, but it should fail, and then give me a setup here, right? Yeah, and then I probably just don't get a trade, it looks like. And that's the beauty of sometimes having rules that keep you out of... Actually, this is a nice trade here as well, though. So there we go. Got another trade available. No entry. All right, and these are just the rules I'll follow. And again, like if any of you are trading a much faster based ICI, let's say, where you do trade stuff like this, or this, or this, or even just the MB high. If you're just buy stopping MB, buy stopping MB, buy stopping MB, buy stopping MB, then you got to follow some of this up. But in this case, there's nothing for me. Why did I start looking at the 15-minute here? What was I doing? Oh, someone asked about MAs. That's right. So again, no, I don't need tightness of MAs or anything like that. I'm looking for consistency in what I'm used to seeing from the MAs, from the pictures I've gathered. And oftentimes, I like to see one moving higher, one looking like it wants to start moving higher, or price not being too far displaced away from them. That's really it. Only caught two trades, it looks like. Caught this one and this one. Yeah. Yeah, they're okay. They're nice. I mean, I didn't take anything because I didn't like the context, but yeah, it looks fine. Started chopping up and then I stepped back. Good. I need reasons and happy to wait for them. Yeah, exactly. So again, I'm the same way. Like I'm more than happy to wait for reasons to actually trade a market. I don't need to sit here and look at a market like this and try to determine what is its next move. I'm just going to look for something that's consistent and happens over and over again that I'm super used to seeing, and then try to get involved with it. Because honestly, it's all I need to do. Like this is in very clear reaccumulation. And the hourly, right, is still in huge distribution. So the likelihood of GJ right now, right, isn't to do this or do this. The likelihood of GJ right now is actually to chop around here for a while, come up, probably come down. And then at this point, it'll have the choice of breaking this and starting an accumulation this way. So that's like choice one. The other choice is it comes down, breaks this, then starts another back and forth, makes the bullish break, makes its bearish break, whatever, wherever the low would be here, and then starts an accumulation here, in which case now I can watch to get involved, right? But otherwise, like this is, I just know this price action is going to be doing nothing for the next, like probably, how long? For the next like week. Yeah, so for a week, I probably won't be even touching this thing because it's just, this is not moving the way I'm used to seeing it move, right? So when you guys watch me do like the back tests or the live trading videos that I make available and walk you through all my thought processes, you'll see there are times where I'm just sitting there and going, okay, this is now going to go sideways or come down. There's going to be nothing to do. I'm going to wait. And those times that I'm waiting are times where literally, you know, you're having days, in some case, hundreds of days, hours, weeks, whatever, pass. And there's just nothing to touch, right? So again, this was all just time that I'm just waiting, doing nothing, because it's not in a clear context for me to trade. Still nothing, still nothing, still nothing. And then there's a trade, right? That was hours waited, and then the trade didn't even get validated. So I get to wait on the sidelines again. Right, look how long this took. This was a move from, just so you know, the last trade looks like it was on the, what is that? The 7th? No, before that even. So the start of the last month, then it was a month of nothing, another month of nothing. So now it's at March. Yeah, now we're March. Now I'm still drawing shit out. There's still nothing to do. Still nothing. Now we're another month in. Another month in. I'm taking a trade and it doesn't even get validated. Another month in. And I finally get a trade on the 26th of March. After not doing anything from... Okay, so it wasn't that long, but from January. So January to March, there was nothing on this one asset, right? On the hourly chart, or whatever you want to call it. So, yeah, you need to get used to sitting on the sidelines. Like, there's going to be markets where there's nothing to do. There's going to be other markets where there's something to do, but if you're looking at one market at a time, you need to be aware that, like, you're going to be sidelining it a lot. Lol, what the fuck? Watching the course makes you trade like Anton. Holy shit. Did you say anything about the part 2 dropping in the hashtag system? Yep. Coming soon. I don't know a single man who'd do that without leaving a trap. Yeah, I mean, again, listen. It's an anecdote, okay? It's fake. Well, Anton, you're giving us diamonds and gold every day. Anton, have you bought the MentaFX merch hat or any of your merch? Yeah, I have a hoodie, but I don't wear it much right now. His sideways was the 16th of November. Okay, we can take a quick look at the 16th, see what's up. Somewhere in here. 16th. So market that, so he's trading a 1 minute, 5, so hourly is fine as an upper end. So you're having a lot of back and forth that's relatively bullish, with the most recent break being bearish, so potential distribution looks to be so. At the moment, upward sloping 20, downward sloping 50, so it's like whatever, don't have much to do here. We can step down to maybe a 15 or a 5. And watch for some kind of clear market condition here, I guess. You went through a stage 1 into a stage 2 to the upside. Now you're in reaccumulation, and you're
you're actually still in reaccumulation. So this is bullish right now. So we get to wait for that to line up at least. So breaks down. Now you're in reaccumulation still. Starts breaking down. Breaks up a shit ton of times. Breaks down. Yeah. So you're in reaccumulation. Okay. So breaks down again. Now you can assume just even though it says reaccumulation, it's probably distribution due to the style of the move. So now you're probably waiting for some kind of way to trade this on a lower. Heading straight down, validate. So maybe now you can start watching the 1 minute. Here, so I'll show you the points where I'd watch a 1 minute. I'm not going to go through the full backtesting day, but here's where I'd start watching a 1 minute. Are we sure we're on the right day? Because this is seeming a little bit too clear. The guy said it was like sideways, wasn't it? I think we're on the wrong day. I don't know. 16th of November. This is the 16th. Okay, we'll go a little bit further. Maybe it goes sideways soon. I'd probably start watching it again here when it broke this low. I'm actually going to draw where the low is so it doesn't get in my way. Here. So below here. Below here. So that would have been invalidated instantly, so nothing to do there. Below here. Probably. Below here. Ignore all this dog shit. Very ugly price. Maybe below here. Oops, sorry. Below this. Finally become a little clearer and then went back to shit. Definitely below here now. Oh, makes double demand. So you would have started watching, it instantly makes demand, and then here you'd start watching again. So just draw that in. There we go. Now you're in way too long of a range to even touch this, so you'd probably ignore it even if you took wins. Okay, so probably before that, any of that is tradable, I'd say. And then what actually happens? Let's see what opportunities are actually available. Ugly, I wouldn't trade. Nothing. This is a trade. That's a trade. Ugly. So the only trade I see right now is this one. Probably something along those lines. I don't know. 4, yeah, you'd probably get a nice RR move out of that. Yeah, ugly action, wouldn't touch. Breaks down. Do we get a trade here? Yeah, a nice sell stop through this. So that's like the only other option I see right now. This one. And then there's nothing. And then I'd ignore the rest probably. Until more clarity came in, because right now it's just bearish. I mean, it's bearish, but it's just back and forth. Clear move down, but you're really long-term in this. I'd probably wait for a new range now, but I don't know. Could start watching under this guy again. I'd probably wait for it to get down to here, be within its own like cloud of liquidity, which would be here, and then watch for the move down. So hopefully it comes up now. It doesn't. Okay, so yeah, there was just nothing for me to touch here. So you get 1, maybe 2 trades, both of which would be break even or wins, at least from my system. So again, that's the rest I don't see as clean action at all. Hey brother, how are you integrating the MBs into the ICI entry method? Well, my good man, what do you think? This break, sorry, what do you think this break here is? Or this break here? Or the fact that this model was derived from a somewhat number of breaks here that were confirmed with breaks here? What do you think these breaks are? When these breaks are occurring, how do you think they're being created? What's happening there? And then you say, I want to recap, how are you looking to use the MB concept during the time of entry? Well, I'm not entering with an MB. I'm buy stopping an ICI, which is basically buy stopping an MB. Because if price is doing whatever and then coming up, well, you should be able to tell this is almost like buy stopping a double MB. Or in some cases, it's something like this. Because I'll buy stop this. This is like buy stopping an intermediate double MB. It's all part of the same thing, but I just coined this term the ICI because I'm looking for a specific setup like so. But you can tell it's based on an MB setup. It's the same thing. And then MBs themselves are literally the foundation of how we read context. So Anton, I shared some setups. I took backtesting on Discord. Could you take a look? Sure, post some photos. Anton uses capital column for indices, just to analyze. It's all the same thing, though. Wouldn't you say US 30 had more relative strength compared to US 100 for the long? Look at US 100. Look at US 30. What market seems like it wants to move cleaner? No, I like US 100 more. US 30 looks choppy. This is the first clean move it might have had. And, I mean, that's great and all, but it's, I mean, like, for me, US 30 just exited a potential stage 1, right? Look at this chop. US 100, where was the chop? Here. It's been in stage 2 into now inner term stage 1 into now stage 2. This is telling me what it wants to do. US 30 is is drunk, okay? It's drunk. It doesn't know how to it's slurring its words. It doesn't know what it wants to do next. With respect to identifying choppy price, how far do you look? I will check out the previous webinar. I think I like talked a lot about zooming in, zooming out, what I do, and I even walked through an interactive version of it. For example, as a 1 minute trader, am I looking back at the last hour of price? I don't do time. I look at MBs, I look at context, and if the context makes sense, then I'll follow it. Right, I'm sure you saw as I looked at UJ just now for you, on recent price and prior, there wasn't like a, okay, there's my cutoff. Let me zoom in. There's my cutoff. Okay, zoom in a little bit more. Okay, let's follow it. Might have been bullish. Okay, but it was moving. Okay, must be bullet, right? Like, that's not how I'm reading price. I'll go and find the context that makes sense right now in regards to the MBs that have been occurring. Anton, did you pay for Excel or did you find a way to get it for free? There are easy ways to get it for free, but yes, I paid for it. It's all a business expense. Hi, Anton. I have a question. My ICI entry is 1 minute time frame. Obviously, the 5 minute is my validation time frame, and I use a 2 hour for the clear concept. As far as I understand, 5 minute needs to be on the end of a stage 1 and then go down on a 1 minute for entry. Am I right? Nope. Doesn't have to be anywhere. I think I spent a little bit earlier of this webinar talking about when it comes to stage 1, stage 2, SSE validations of them, and why I teach them the way they are, the way I do, as a framework for patience, right? As a framework for actually setting up boundaries for staying out of price or then getting involved. No, your validation time frame does not have to be in any one spot. I don't personally look for it to have to be in a stage 1 end or stage 2 end or whatever it is. I just don't want it to be choppy. I don't want it to be ugly. I want it to be clear. I want it to be telling me what it wants to do. Right? So US 100 here, clearly bullish, reaccumulating, clearly bullish. So my higher time frame is clearly wanting to move long. My hourly, which would be my next time frame, is clearly doing what? It's either in a stage 1 right now or entering stage 2, which is exactly what I want to see. And it's moving clearly in regards to that. The contexts are there. Accumulation is present. I can look at my 15-minute and do the same thing. Accumulation is clearly present. Reaccumulation is occurring or coming to an end. You have a stage 1 entering potential stage 2. So to answer your question, yeah, technically, you're looking at end of stage 1, start of stage 2. But that's kind of what I spoke about. I said all my entries are almost always looking at the gray zone between the entry from 1 to 2. Because that's how trends function, right? Why would I want to enter knowing that I'm in stage 1? I wouldn't, right? If I knew this market's going to go sideways at this point for another 5 days, then great. I would wait, and then I'd enter here. But I'm not someone that can just know that, so I have to enter with the supposition that, hey, we might be ready for a move, even though there's not another move prior to that. So, yeah. The 5 minute needs to be at the end of a stage 1. It doesn't. But yes, the 5 minute needs to be in a clear context. What clear context means to you can differ based on the system that you might be using, but if I'm looking at an hourly, for instance, I mean, what did I look for here as I'm looking at it? I wanted to see that I'm in clear potential next move to the top side, which is what? Stage 2 or start of stage 2, right? So yeah, I don't want to enter in a choppy action, right? Anyone that wants to enter during this, I mean, that doesn't make any sense to me, right? If you know a market's going to do this for the next, let's say, hour, and you know after that it's guaranteed to do this, why would your entry be here? Why wouldn't your entry be here, right? Because you know this can just wick you out of any move that you might take. So I guess to answer your question, yeah. I do not enter stage 1s, or I don't try to enter stage 1s unless it's on the brink of stage 2. I remember I heard somewhere that most people would outperform the market by simply buying new highs and selling new lows. It goes hand in hand with the statistical research someone here made. Yeah. Yep. What is SSC? New here. You will learn all about it. SSC is just a simple way to define range. It's structure, supply and demand, confirmation, and usually it's the understanding that when this occurs, you suppose this to happen next. And there's many ways to determine this range, some of which include higher time frame MBs, intermediate ranges, 2.0s, demand types and supply types, the validation of them, etc. Hi Anton, can you go over the context? Can you go over context and reason for bias? Yep. Watch the course through once, and you will have every answer regarding that. But if I could go over context in 2 seconds, I would. But the general approach is that I look for models that line up across multiple timeframes with each other, and then I follow them across timeframes. And then I enter on my given time frame. At what point would you consider a market that has been historically bearish to be bullish? Well, actually, I have something really cool coming out regarding that. Historically bearish to be bullish. Well, simply to answer that before I even say anything further is context. You look at the models of the market and you determine whether or not it's moving into bullishness or not. Number two, the second best way is to watch specifically the teachings on exactly that. So I think I went over it here. Did I? No, it wasn't here, is it? I forgot what video it was. Maybe I haven't released it yet, but there was a video where I discussed moving from a bearish to bullish and how it was doing it. I have another one coming out soon for the system section where you're going to see me show how to move from bullish to bearish. So I'm going to have that available very soon. But how do you consider it? Well, you look at the models and then you confirm them, as I've always taught, right? So that's number one. And if the times are different, at what point do you think you would consider the context sound enough to take the trade in the direction opposite to the prior direction? When the bias changes, right? Hey, Anton, just want to say I really appreciate these exercises. Extremely helpful and useful. Great learning time. No problem, man. I'll see you. Send some hugs and love, please. COVID got me very bad. Can't even watch just listening. Oh, shit, man. Get better, man. Would this be too early? I don't know. Where was the market at this time? What was it doing? What was the higher time frame looking like? Did it meet your rules? What was your experience with trading other systems like these? What do the other, hopefully 200 to 300 screenshots of the same kind of setup show you? Are they good trades or are they not? Would I personally be entering this given no other context? No, because I don't trade without like more context, right? I mean, like the entry's fine. It's an ICI. That doesn't change the fact that I have no idea what the higher jumper is doing here. Like, would this be too early? Maybe. That's all I got for you right now. Understood. Just wanted you to speak on it a bit. From what you said, I understood it correct. The confirms that I've understood the role of MBs with the strat. No problem. Okay, good. And so can you show us a quick example of using the rule of 4 and 30 again? Sure. Multiply a time frame that you're trading by 30 for a higher time frame and by 4 for a validation time frame. Okay, so we zoomed out a little bit. That's good. Yep, so it comes from a very bullish market into a reaccumulation, into this huge flush out, which looks like it might be like a Binance thing. This does not look like it happens on Coinbase. Is this Binance? Yep. Okay, so we can ignore that because that's not how prices move. I don't think that's right, but either way, that says reaccumulation. Yeah, this entry's not bad. It's fine. It's in the gray area between that 1 and 2, like we speak about. It's in reaccumulation. It's moving bullish, so we know this was that bullish market because I remember this price action now. So yeah, this could have easily started another move higher. Looks good. Gotta run. Have a good rest of your days. I'll see you, Dan. I gotta dip in a second as well. We're about, holy shit, how are we doing 2 hours every time? What is going on? How did that happen? Again. 10 p.m. Good night, buddy. So yeah, this is a fine trade. I don't think it's too early. I would stop looking at Binance, though, because I'm pretty sure that's not what Bitcoin did. Yup. It is not what Bitcoin did. Is it? Only 2 hours. We're just chilling. Yeah, we are just chilling. But yeah, so definitely, it seems like we have a bigger influx of people that are kind of brand new, which is amazing because that means that a lot of you are going to learn a shit ton. But over the next few months or over the next like month as we enter kind of Christmas, nothing's really happening. Markets are slower. Use this time to actually learn and understand a lot of the stuff that we do here. It's all taught. It's all gone over. But it's really important that you go over it, right? Because, well, I mean, it has everything that I've ever done right in front of you. So this is only my second webinar, but looking forward to every Sunday already. Let's go, JKX. I'm happy to have you here, man. Join from the Black Friday deal. Loving it. Hey, Burke, I appreciate you too, man. All right, guys, listen. Thank you all for being here. Very quickly for the upcoming week, personally, I really just don't see anything. I'll probably just update you guys in the MetaFX trade ideas if I do start seeing something that's moving. US 100, I'm just managing this long. So if anything, I like the US 100 longs. Other than that, though, I mean, you're just talking about multiple markets kind of shit in the pants right now, sideways action, not much to do. All right. For those of you guys that are struggling a little bit with like context and with the MAs or stuff like that, keep going. Watch the live trading videos and the hashtag ICI extras that I've been releasing. I'll have a part 2 released very soon for all of you this week. Hopefully, I have to just get it processed. It's just been on my mind. I haven't been able to do it. And for the guy that asked about the transfer of bullish to bearish and how that looks like, it's actually going to go over that in that video. Okay, so that part 2 is going to cover that. But the general way to do it is you just allow the models to do it for you, right? Models are going to show you when to get involved and when to stay out. When models start entering more sideways and back and forth conditions, there's not going to be much to do other than wait for the market to show you what it wants to do, which is when, for instance, markets like these can begin to undergo bearishness, right? Notice how I haven't traded anything here yet, right? I've been bullish, but guess what? If this market wants to start undergoing what? A distribution into new distribution and continued distribution, then it's going to enter distribution here as well, which means that then it's going to be very likely that it wants to make a move for the lows. But until then, there's nothing much that I have to touch right now, right? This is how markets undergo the back and forth. This is how markets enter bearish into bullish, etc. Right? That's how EU entered from bearish back to bullish. Right? We were bullish during this time. We became bearish, and now it's actually becoming, I believe, bullish again. But I haven't even watched this thing. It's just ugly. Oh no, so it's retaining its bearishness now, which is what I expected. Coming down, so like this thing needs to play out and start showing us that it wants to go bearish. What is this up to? Yeah, it's actually all right. So EU shorts might actually show up. Yeah, I don't know. This is so ugly. I'll keep you guys posted. We'll see what happens. I'll do some more deeper analysis on my own right here, and then we'll see what's going on. But right now, I'm not really seeing anything. Everything that I look at feels like it's 50-50 either way, ugly, back and forth, choppy. So I'm very likely just going to sit on the sidelines here and keep trading some and managing my stock positions, because a lot of stocks are looking good right now. And so you guys know, if you want to be able to do the same thing, I mean, literally open up the stock screener, filter by yearly or 6 month, whatever you want, and start looking at markets. You're going to find ones that are good, that are doing like clean things, right? In regards to good setups. Go through them, analyze them. UZCHF is ugly right now. I remember I looked at it a little bit earlier. I showed you guys that I was watching for, what was it? There it is. For shorts on it, then it started moving long. Daily is short. Hourly is weird. 15-minute is weird. So again, like, yeah, right now, if you're trading a much lower time frame, bullish makes sense, but I'm waiting for the bearish to come in. Break at the 24th and 31st of December. What do you mean? Oh, I see what you mean. Likely. I'll make an announcement and whatnot if anything like that goes down. But in the meantime, guys, keep working. This is a beautiful time to be a part of this. If you're new, it's gonna take a little bit more time, of course. But if you're an immediate, this is like a beautiful time to use this time very, very wisely. Even if you're brand new, use this time wisely, because nothing's happening. Things are slower. So yeah, get on with getting educated so you can start doing this shit for yourself. All right, guys, listen, thank you all for being here. I appreciate you guys so much. I'll see you all in the trade talks of the world, and hopefully we get some more funded members come 2024.